Hello everyone, Tesla and Netflix reported earnings today and Apple released some very important news. So in today's video, we're going to take a look at the S&P 500, the NASDAQ 100, the Russell 2000, the dollar, the bonds, the large tech stocks, piece it all together. We're going to see what the next steps are in the market. All right, so without further ado, let's get started with the video. All right, so first, let's go ahead and take a look at Netflix. So Netflix subscriptions jump 8%, revenue climbs as password sharing crackdown takes hold. All right, so revenue, talk about that, but basically earnings, they reported $3.29 a share compared to 2.86 expected by Refinitiv. So revenue was 8.2 billion and it did not meet expectations. The good thing about Netflix is that they added 5.9 million customers during Q2, but the stock is down 5% after hours. So basically the reason for that is Netflix said it was too early to report a breakdown of revenue from the ad-supported tier, which was introduced late last year, as well as the accounts that have come from the new sharing policy. So basically, they're saying, look, guys, we haven't seen our final form yet, so they didn't want to report it yet. So that's why that, coupled with the fact that they missed revenue, was the reason why Netflix is down currently right now. So overall, screw Netflix. Yeah, you can see that it closed at 477. Currently it's trading at 454. And yeah, it's clearly had a very big earnings run up. Things were very, very bullish with Netflix. We remember, right, yesterday's video, and now, you know, post earnings, it's coming back to its senses and it's coming back to levels of support. All right, so there's that for Netflix. Let's go ahead and take a look at Tesla. Next, we're going to take a look at Tesla. It's pretty interesting that Tesla is not really moving much in the after hours. Tesla books record revenue at 24.9 billion with margin declining after price cuts. So Tesla posted an all-time high quarterly revenue, but operating margin dropped to 9.6%. Cool. So basically, the revenue was 24.93 billion versus the 24.47 billion expected, and earnings was 91 cents per share versus 82 cents per share expected. Cool. So by way of comparison, during the first quarter of 2023, Tesla reported net income of 2.51 billion on revenue of 22.33. During the second quarter last year, Tesla reported net income of 2.27 billion on 16.93 billion in revenue. So basically, what is going on is that Tesla is not really it's not really overperforming. And the other thing is, earlier this month, Tesla reported 466,000 total vehicle deliveries for the second quarter and said it produced 479,000 electric vehicles. Deliveries are the closest approximation of sales that Tesla reports. So the other discrepancy, one of the other discrepancies in Tesla's earning report was here, revenue from Tesla's core automotive business rose 46% year over year, which is nice, right? 21.27 billion, about a 6.5% increase sequentially. That's not huge, but its energy generation and storage revenue from solar installations and backup batteries rose 74% year over year, but people were expecting this number to be much higher. So with more vehicles on the road, Tesla services and other revenue, including fees for out-of-warranty vehicles repairs, rose 47% to 2.15 billion. So, so one of the things is like the operating margin, revenue from Tesla's core So Tesla posted an all-time high quarterly revenue, but operating margin dropped to 9.6%. So it is definitely, the fact that Tesla has not moved much in the after hours is that, like, this is really, really, like, really actually crazy, because generally Tesla is a huge mover in the after hours. We do have an earnings call at 5:30 p.m. Eastern time, so maybe they're going to like report something that's out of the norm or something that people are just in anticipation waiting for that. That's the reason why we haven't moved much, but it's pretty interesting. So from a technical standpoint, Tesla it's still yet to be determined. We have about, whenever this video comes out, by 5:30, it's yeah, we're gonna find out. But basically, we don't know yet how Tesla is going to respond, and Netflix didn't do too well. All right, so next, let's go ahead and take a look at Apple. So if you were watching Apple stock today, you know that Apple shot up. So Apple stock pops on a report it's developing its own equivalent of ChatGPT, and they're calling it Apple GPT. So for the past year, technologists and investors have been enamored of large language models and AI technology that can turn out text or code that looks like a human wrote it. So basically, Apple is getting into AI. They already have a mobile device. They can basically implant everything in house, and this is their way to combat Microsoft and Google as well. So it was just a matter of time, and this is pretty crazy. The other important news is that Qualcomm, which makes the processors for phones that compete with Apple's iPhone, said that it would work with Meta. So its LLMs would work directly on Android devices instead of on faraway servers in the cloud. So there's some beef going on. So to some degree, Apple is late to jump aboard the LLM trend. Microsoft has integrated OpenAI's ChatGPT into its software. We saw yesterday Microsoft integrated into its Teams. They're integrating AI into the Teams. You see that they integrated it into the search engine. And Google has integrated Bard into its search engine. Amazon will offer LLMs through AWS, and Meta open sourced a big LLM project as well. So Apple is things are getting very interesting. It's gonna be pretty fun to see what's going on. But yeah, this is definitely really, really huge news. That's a really weird ad, but yeah, that definitely some really, really big news on Apple. Let's go ahead and take a look at the chart. So quite clearly, we skyrocketed and sold off just a bit afterward. So this was a really, really big move, and people are in anticipation of what is yet to come for Apple GPT. They said that they're going to report it or release it not anytime soon, but it is in the works. So that is pretty interesting about what's going on. So we kind of just basically looked at like the largest tech stocks that were going to have earnings. Tesla didn't really do that much. Netflix was, clearly it's falling even further down now. So we're going to have to see how Tesla responds at 5:30, what they're going to say about the Cybertruck, how they're going to respond to people in regards to like people's anticipation of what's to come with the earnings report. If like something could be really, really bad and people are left hanging about the Cybertruck, then I could see Tesla falling as well. So yeah, it should be pretty interesting to see what happens tomorrow. Next, we have to take a look at the dollar, the bonds, because the dollar and the bonds also heavily affect the overall market. All right. So finally, we're seeing the dollar. So the dollar is very, very important because it has an inverse relationship to the market. So if the dollar is doing well, that means that the stock market should be falling. All right. So currently, the dollar is starting to finally come and bounce a bit. It still has not crossed above this 100.5 level. And once it breaks above this level, once it breaks above that level and closes, that's when the dollar can start to fly back up to this high here. And then basically the stock market will once the dollar breaks above this, the stock market will definitely begin to fall, in my opinion. So just keep an eye on that. The other thing that we need to take a look at is the 30-year bonds. And the 30-year bonds are relevant because they have a bit more correlated relationship to the market. So if the bonds are doing well, then the stock market is also going to do well. So over here, when the bonds were very overextended, I was saying that the bonds were going to bounce. And because the bonds were going to bounce, I was saying the stock market is also going to bounce in unison. That's exactly what happened. And now the bonds are coming to this level of resistance that I was talking about in yesterday's video. Well, not yesterday's video. It was posted it like 12 hours ago. Yeah. So this is the high that basically the bonds need to break above, and it looks like we're knocking on the door. So if we close above this level, this is a really strong. This is really strong on the bonds, to be honest. So the next, this is just a huge strong move on the bonds. We saw the short term. So obviously we saw the short term bonds taking a hit, and things are just, it's basically just inverse. The 10-year yield is inverse to the 30-year bond. So, you know, clearly you can see that this is just not doing too well. This is not that strong of a setup. There does look like it can break a bit lower, but then from here it turns into a falling wedge, and then that could end up bouncing. And if this ends up bouncing like this, then that would also feed into the fact that the stock market will get a pullback, and the dollar could continue to rise as well. So this is interesting, because if this starts to show some strength, then it will show weakness in the overall market. And this is starting to show a bit of a falling wedge pattern, and falling wedge patterns are very bullish. Okay, we took a look at all that stuff. Now let's have the fun. Let's have fun, and let's take a look at the S&P 500, the NASDAQ 100, and the Russell 2000. Okay, so number one, we see that the S&P 500 is clearly just continuing to rise. We saw that we can easily come back up to this level of resistance here at 462. I was showing 464, 465 area yesterday as well. And the SPY can just continue to rise and stay in, I'll stay on cloud nine, to be honest. There's a lot more room to go to the upside. And, yeah, sorry. So there's a lot more room to go to the upside. And it doesn't really seem like there's going to be a major pullback unless there's something that comes out of the banks towards the end of the week, or if Tesla reports like some terrible earnings and pulls the NASDAQ down. But regardless, you know, it does look like there could continue to be a move to the upside on the SPY. And just, you know, the main level of support to the downside is 452. We're above 450. So there's, but regardless, swinging along is not beneficial here at this point. It doesn't look like there's going to be that much room to the upside. And once we get here, that's when you would want to start being short. You don't want to start being long here, so far away from levels of support after we already had a huge move to the upside already. And in yesterday's video, basically I posted it this morning before the market opened. So I was showing the last two times that this happened in the past decade, where the SPY would just be this overextended to the upside and it just continued rising. Each time from the lows of this candle here, the SPY went up at least 4.5 to 5%. So each time. So this is the third time. Currently, this is the third time in the past decade where the SPY was this overextended to the upside and it continued. So technically, right, even if we were to hit 3.8%, we would hit this 462.14 level on the SPY from the recent lows of the gap up to at least the past two times they went up 4.2 and 4.8%. This is only 3.8%. So what I'm showing, right, is the risk reward. Where are we right now in terms of percentage gain? We hit 2.3%. Okay, so we're at 2.3%. If there's another 2% left in the tank to the upside for the SPY, cool. But it's a 1-to-1 risk reward ratio now at this point to go long. Because if there's 2% remaining, then how much is basically you're risking? You're basically buying in the middle, and it just doesn't make sense to try to go long here in the middle, honestly, and swing long. So I hope this makes sense. There's that for the SPY. I'm not looking to be bullish here. I'm looking to be bearish, closer to 464 or 465. And we could just, for argument's sake, just look at where it is. 4.5% is at 465. And this is generally, but once the SPY is up 4 to 4.5%, that's when it becomes a lot more like safer according to the past 2 times to go short. But that depends on if we even get there. All right, so there's that for the SPY. Let's go ahead and take a look at the NASDAQ. So the NASDAQ, first of all, let's go ahead and take a look at Microsoft. So Microsoft skyrocketed yesterday because of their AI news. Today, they had a bit of a pullback, okay? Who was next up in line? Apple was next up in line. Had a huge bullish move, so it helped keep the market up. It helped keep the NASDAQ up, right? Take a look at Nvidia. Nvidia also had a huge move yesterday as well. Today, a bit of a pullback. AMD gapped up, a bit of a pullback. Amazon bounced up. The stocks that weren't getting that much love did well. So Apple, it wasn't skyrocketing as much. Amazon wasn't skyrocketing as much. Meta just continued, honestly. Meta, all of these companies are just launching new products, or they're incorporating AI, and honestly, it's very innovative. Very, very innovative. So if there is something, they are continuing to innovate and compete. So that's cool to see. But yeah, Facebook is continuing to skyrocket. We can take a look at basically crude oil, which is like, so basically we're still skyrocketing, and the NASDAQ is much more strong and overextended to the upside compared to the Russell, compared to the SPY, because it's showing the most strength. The tech stocks were showing the most strength recently in the past few weeks. And the NASDAQ, it's being held up because every other tech stock was reporting some crazy new innovation or product or AI assimilation tool or something like that. So unless Tesla reports terrible earnings, it looks like the NASDAQ is just going to continue to do well, because even if Tesla doesn't do well, Apple is a part of the AI game now as well. So there's it's going to be tough, honestly. Definitely you don't want to be completely bullish over here, because we're very, very overextended from the moving averages. So we are just looking at it from a percentage point. We're 8% away from the 50 moving average, and we're almost 20% away from the 200 simple moving average on the NASDAQ. We don't get this far overextended usually. And in the next video, I'm going to, because this is probably the most overextended I've seen the NASDAQ in terms of distance away from the 200 simple moving average that I think I've ever seen. Nope, sorry, I knew there was recently, basically right after the COVID crash in September, when we bounced, the NASDAQ was actually above 20%, close to 25% away from the 200 simple moving average. So never mind. So there's still more room to jump to the upside for the NASDAQ in terms of distance away from the 200. But you definitely don't want to start being long here. There is still more room. Basically, this is where the market is. This is where the market is in general. There's room for another impulsive move, like legs up, maybe 1 or 2 more legs up to the upside, to really get everyone bullish. It's like, oh wow, okay, I don't want to miss this move back up to all-time highs. I don't want to miss this, blah, blah, blah. They're going to try to paint it as bullishly as possible, try to create opportunities for people to go short. Once those short opportunities don't work out, they're going to rip it to the upside. So for example, right now people are shorting, right? Over here, people are shorting. They're going to probably just continue to make new legs up, get people who are shorting to become very, very tired of shorting. And then once those people switch to become bullish, that's when they're going to rip the market down. So basically, now is not the time to start being manipulated into going long. And Yeah, definitely not. There's not, the SPY, it's basically at a 1-to-1 ratio in terms of distance to the upside now. And the IWM, not even mentioning the IWM, is basically like still weak, right? We have earnings heading into the end of the week, and this main level at 199.26 is still going to be the level of resistance. And the IWM is the weakest out of the three in terms of relative strength away. So I hope you guys enjoyed today's video. I've been up for almost 48 hours. So I hope you guys enjoy this. And yeah, all right. I'll see you guys tomorrow morning in the live stream. I day trade from 9:30 a.m. Eastern time to around 11:30 to 12 p.m. Eastern time every day. Thank you guys so much for watching for this long, and really appreciate. It's a blessing to me that you guys are even watching up to here. It's very humbling, and I will constantly always do my best to make everything work out. And yeah, things are just getting started, and things are about to be really fun for the next few months and the next few years. There's a lot of new innovations, there's a lot of new technologies coming out, and things are only going to be up from here. All right, so hope you guys enjoyed today. I'm gonna be live on TikTok at 6 p.m. Eastern time, and yeah, that being said, love you guys, take care, and I will see you guys bright and early tomorrow morning. Thank you.